All right, so Parth, I guess whenever you're ready to start off.
Yeah, can you see my screen? It's the first time I've been using this before, but
We
let's
saw it
see.
earlier. I think it's gray now.
Really? Okay.
Yeah, we could see it now, Parth.
Thank you. All right. Well, today we'll be kicking off the Market Watch game. There have been some kinks in the road, so don't expect it to work perfectly. But what I've seen right now and looking over it before we started, it looks fine to me right now. So for the 2 weeks, anyone's inside this can invest into any stock they want, only for 2 weeks. And then following through, I've decided we'll be going into the technology sector after 2 weeks. So from that point onwards, only tech stocks. So Tesla, Apple, you can be pretty liberal with it. And then we'll be moving on to different sectors afterwards. I'll announce it later. Maybe something like healthcare. But click the link here. George, maybe you could put it in the chat too. And the password is Stanford 2020. But other than that, that kicks off our Market Watch game for the semester. So good luck, everybody. And I'll introduce now Stephen Chase, the Managing Director, Investor Relations for AmCap.
There we go. Thanks. Well, thanks everybody, and thank you all for letting me join your meeting today. It's an honor to join the group and a pleasure to meet everybody. So even if it is virtually, someday hopefully we can all meet in person. So I think what I'd love to do today is I'll give you guys just a quick overview of the commercial real estate space. I'll tell you a bit about my firm, AmCap, and then kind of talk about some of the opportunities that are in the market or in the business, particularly for people coming out of school. And I understand I may be the first commercial real estate presenter before you guys. So again, I'm not sure how much you guys know about the sector, but happy to answer any questions at the end and go forward in the discussion. So I sent some slides. Am I supposed to post them or are they available to everybody?
Yeah. So Stephen, thank you for coming. Hi, it's George. I made you presenter on WebEx. I'm not sure if you would like to share the slides yourself. If not, I would be happy to share them for you.
I'll tell you what, since I'm technologically challenged, if you have them there and you want to just put them up there, that would be great. Otherwise, I can.
Yeah, no, I could present them for you.
Go for it. Yeah, I haven't used WebEx as much. Sorry.
Okay, no worries.
Living on Zoom for.
Okay.
But while he's doing that, there we go. So we just go. That's just our little cover page. That happens to be a shopping center that we own outside in Denver. It's a pretty picture. Just gives you an idea of the kind of stuff that we are involved in. So if you go down to the next page, just to put some context around this, if you look at the investable assets, really the groups that investment firms, pension plans, sovereign wealth funds, anybody who's investing capital on their own part or on the part of others, it really divides down into three main areas. So you've got your equity markets, which I think you guys are, from what I gather, just know a bit about, the fixed income or the bond market, and then there's the real estate sector. So, and if you look at that pie chart on the left, the real estate sector is the biggest of the investable asset classes in the world. It's $228 trillion of assets. So that compares to only 74 trillion, still a large number. But if you think about your world and what you hear about, so much is related to equity. Meanwhile, the real estate market is by far the largest class. So that's the one where a lot of international, a lot of U.S. capital goes into the real estate stock, and that's I'll touch on what that includes. But the buildings all around you. Then if you break that down further into the U.S., you have 33 trillion is in residential. And then their commercial sector is about 16 trillion worth of assets. So that's really what I'm going to focus on, is that 16 trillion out of the global asset base. And that's really where, where I focus, and my peers. And by the residential space, just to clarify, that's really single family residential. So the houses around the country. As you see, if we go to the next slide, breaking this down further. So the like apartments falls within multifamily. So I drew a little box around. There's the 4 squares to your left. Those include what we call the 4 major food groups of commercial real estate. So you've got retail, about 2.4. I put billion. I believe those should be in the trillions. I'm sorry about that. Industrial, multifamily, and office are really the 4 major food groups. So by industrial, those are your logistics centers. You might read about Amazon putting up all these big, huge warehouses. That's industrial. It's not factories or what you may consider to be industrial, but it's really more logistics oriented. Office, multifamily. Hospitality is all hotels. That generally sits outside of the 4 main food groups, largely because it's got a really high operating component. So a lot of real estate investors look at that as more of an operating business rather than just by buying property. Then you have your niche asset classes, which are growing actually quite rapidly. So it's medical office, student housing, that's the apartments by your campuses around the country. So it's really, college oriented. Self-storage and senior living are some of the larger ones within those niches. Probably 2 of the hottest sectors in real estate right now are actually within the niche, and that's data centers, playing off all that growth in e-commerce. And the other is manufactured housing, so trailer parks, trailer homes. For various reasons. One, it's very hard to get trailer homes approved in most neighborhoods, so when you can't get it done, they're worth a lot. So that's really the way the commercial real estate world breaks down. Most people that play in it are going to be in one of those groups or another. Some participate in all, and I can kind of touch a bit on who does that. But my firm, for instance, as we'll get into, we focus on that top quadrant. That's the retail sector. And then I think probably the groups, if you're just an outside observer, some of the groups that you're going to be most familiar with will probably be in the multifamily or in the office space. Those are just more of the name brand investors. If I'm moving too fast, or if you have any questions, feel free to interrupt. But just wanted to that put some context around who we are and where we operate. On the next page, I'm going to skip the next page and come back to that. I'm just going to tell you who we are. So AmCap, we're based here in Stamford. I'm sitting out here looking on Long Island Sound right now from my office. So we're down at the foot of Canal Street, for those of you who know the area well. We've been around for 40 years, and we are what's called an owner-operator. So we buy grocery-anchored shopping centers. So if you shop at a Stop and Shop or wherever you may be, if there's a grocer, and then there's going to be a bunch of stores that are around that grocer. So those are called inline retail. Our business, we only buy existing property, so we are not a developer. So we want to buy a shopping center that's already been built, is up and operating, and generally has either is fully leased. So we will buy that as what we call a core property, and we'll really just buy it for the cash flow. Or with a different strategy, it's more of what we call a value add. We're going to try to find one that needs work. So it either has a lot of vacancy or it may need to be redeveloped. We do that. For instance, we own a center in Chicago that has a Kmart box. The Kmart went dark. We tore down the Kmart. We rebuilt it. And within that same footprint, we've taken, instead of 1 box, we've turned it into 3. And we've released that to 3 different tenants, one of whom I can't name, but you could probably guess it's one of the largest or the largest player in the e-commerce space. Just to give you an idea, even they are moving into what we call bricks and mortar retail. So that's where we call sort of really creating alpha. So you buy a center, hopefully at a discount to market, and then you add value to it by increasing rents, increasing the space that you can rent, improving the overall property. We do that with a team that we have in-house. So we're called a vertically integrated operator. We have our in-house leasing, we have property management in-house, we have development teams, all within AmCap. So we manage the entire center by ourselves. There are instances where we'll hire third parties, and I'll come back to that in a minute. But generally, we want to own the asset. We want to control it. We want to do everything. We think that's the best way of maximizing value. We're in the world of commercial real estate. We are a small player. If you go to the next page, show you some of the numbers. So while we've been around for 40 years, we've got about $1 billion of assets under management, which puts us, well, we're small, but obviously we're smaller than the really big guys like the Blackstones of the world. But we're at a very institutional level. So there's a lot of people that are a lot smaller than we are, but $1 billion is sort of where you get to where you are known as institutional. Over our tenure, we've delivered, it's a 14.3 IRR net to our investors. That's good because that includes both levered and unlevered. By that, you're unlevered, you're going to generate, a low to mid single digit type of a return, even if you're doing really well. We have had 0 defaults in our history. So we've seen multiple cycles. Obviously the great financial crisis. I will tell you the last 6 months have probably been the most challenging that we have seen in our industry. And no defaults through that time and none anticipated. And that's on a current base of 59 properties across 24 states. We do invest around the U.S. Currently, our footprint is just within those 24 states. So that's who we are. These 2 pictures, again, illustrate the kind of places that we own. King Soopers is the dominant grocer in the Denver and Colorado market. That one above it is a shopping center outside of Chicago. You've got an Aldi, a Ross, Dress for Less. There's a Walmart down on the far end of that. I believe there's a Dollar Tree that's not in the picture. That's just to the right of the Aldi. So it gives you an idea of the types of tenants that might be in the shopping center. And I think the next slide is really the last one I have for AmCap, just to show you again where we invest. We focus on the top 50 markets in the U.S., which is pretty commonplace. Most investment managers like ourselves, in almost any kind of property type or asset class, even on the private equity side, is going to really be focused. These are the markets where when you guys graduate, you're going to want to live. So if it's not Stanford, it's going to be where there's a lot of growth, where there's a lot of tech jobs. That Denver market where we have a big office is booming. We own properties down in the Raleigh area, mid-Atlantic around Washington, D.C., Florida. Texas is a big market. We don't have anything there now because it's really expensive. But hopefully that helps give you some idea who we are and where we play. Now about the sector, if we drop back a couple more slides, George, if you think you've got that. All right there. So what are the opportunities and, where do people work in this business? We've tried to break it down. These are the different, on the left-hand side, your products and services. And that means really there's companies oriented around this. So there's construction companies, there's a residential leasing. Those are people that are leasing your apartment buildings, commercial leasing. And there's various ways you can play that. Those are the ones that are leasing out office space, industrial space. You have sales and brokerage. Those are the selling, actual transactions, buying and selling of the physical assets. Your property and asset management, similar like what we have in-house, but done on a third-party basis. And I'm just going to jump, if you look onto the right side, these are sort of what you would do if you work for those. So you could lease, I won't read them all, but you could lease non-residential buildings on behalf of either the owner of that building, or in many cases, you could be working for a company that's looking for space. And in this area, there's lots of leasing companies. Some of the major players, like a JLL, there's a lot of the big commercial brokerages have presences in this market. I mean, we're in a wealthy market. There's a ton of real estate, so every major player has an office in this market. Selling and buying of real estate, again, that's more on the transactional side. And every major broker has offices in the market. And you've got the property management services. So your asset managers, people who maintain the properties, make sure that they're well equipped and keep maintaining the value of those properties. Then there's the more esoteric services, the appraisals and valuation, generally working on behalf of owners or sellers. Not to make this too confusing, I'm going to jump back to this little red or pink line here. I would say of everything above that, I don't know the exact number, but I'm going to say probably 95% of the jobs in commercial real estate are in those areas. 5 to 10% are down in this private equity and the investment side. So this is really the finance side of the business. So this is where it gets really competitive. But this is your investment banking jobs, your jobs working like where I do for a private equity firm. And really where you're moving away from being more of an operator of real estate assets to participating on the finance side. So whether that's buying and selling of buildings, either actively as an owner operator or as a banker, being more of a transactional player. But that's so, I mean, if this is the finance club, maybe that's where you guys really want to focus more of your attention. What I would say is for many of these jobs, and certainly on that, the red slide on the investment side, almost every broker firm, every investment bank, and many of the private equity firms will look at analyst roles. So that's really the way to enter this part of the business. And even on the leasing side, you're going to come in what is called an analyst job. And you're going to be spending a lot of time understanding how to model real estate. And generally that's just understanding how the cash flows of an asset work. Real estate, unlike some other types of investments, I mean, it's very easy and there's a very methodical way of valuing real estate. You take the anticipated cash flows from an asset. Basically, it's a discounted cash flow model back to what that value should be. So I think as an analyst, you spend a lot of time just trying to figure out what those cash flows look like, whether that's, you're starting off with your rents, and then you take your expenses out and you get to a net operating income level. And obviously, that's very simplified, but that's the bare bones of this business. So if you're thinking that this is a business that you'd like to participate in, those analyst roles, whether at an investment bank or at a brokerage firm, are really probably the best places to start if you're thinking on the finance side. You can certainly try with a private equity firm. I know in many cases the private equity firms look for people that already have some experience just because they're leaner staffed. They don't want to spend the time teaching people how to model. So if you can go somewhere that's going to teach you how to model, you're going to have more options after that. And that's usually about a 2-year program. And just to give you an idea how competitive this is, and I think it's a great business, and I'll tell you more about that. But we are currently looking for an associate, which is the next level up from an analyst. And we had 850 applications for this job from many, many firms all around the country. And that's just that one job. I think we benefit from being in Connecticut for people who want to get out of New York. But there's definitely, there's a lot of interest in working for what's an acquisitions role within a private equity firm is what a lot of people aspire to. And for that, we're really looking for somebody who has and I'll say this, I was a history major in college. So if there's a history major in the crowd, there's hope for all of you. But I kind of took a wayward path to what I do. But when we were looking for candidates, even at an analyst level, you tend to look for somebody who has some relevant experience or educational background. So that's going to be training. And if we find somebody who comes out of college and has a real estate degree, there's not that many really good programs that are not that many programs in real estate, I should say, and they're all good that have them. We love to see that. It shows somebody who really likes the asset type and understands what they're doing. They've got a leg up there. If you have a finance major, that's great. And if you have any relevant experience, whether having had an internship in real estate, and oftentimes those are going to be with brokers or with a private equity firm such as ourselves. That's really what we look for. GPAs are certainly something that we tend to focus on probably more than I'd care to. But it is having some relevant background to working in finance is key. So I would say that applies to not just, any firm in our business. And I would say the last time we hired an analyst, unfortunately, this kid started on March 9th. But we probably had 450 applications for that job. So, and he came out of a REIT. He'd had 2 years of experience, and he had a real estate finance degree coming out of college. So he was a great fit. So unfortunately, he had a really rough first 6 months because he couldn't meet anybody in the firm. But I think what made him stand out from everybody else was the real estate degree that he had. His experience was great, and he was just willing to do anything. So we were hiring him to be an asset manager and a acquisitions person, but he also said, recognizing that as a small firm, you wear a lot of hats. And he said, I will do whatever you guys need me to do to be successful, I'm here to do it. So I would keep that in mind. Every firm likes to hear that. They want to see people that are flexible and open-minded and willing to learn new things. I hope I'm not droning on, but trying to give you an idea of the industry. I'm happy to answer any questions anybody might have about either AmCap, the commercial real estate business. I would say, I mentioned briefly, I think it's a great business. One of the things, and I've been on an equity in the equities business. I've worked with hedge funds, and I've been in the real estate for many years. And I think one of the things that distinguishes the real estate business is that it's very personable. It's relationship driven. It's not a big business, particularly in the world in which I dwell, or the finance side. Everybody knows everybody else, and so networking is incredibly important, and it's encouraged. And the people are great, and you can bounce around. I talk to my competitors all the time. And I'm saying this because this is unique relative to certainly the hedge funds or the private equity world, where it's a little more cutthroat. Those are great businesses, but if you like more of an interpersonal relationship, this could be a great place for you to be. So, in addition to if you like buildings, this is the only place to go if you like buildings. So happy to take any questions if there's any out there.
I had a question.
Yes.
Since COVID started, has your investment focuses, have they changed?
Good question. Not really. Because of what we're fortunate. I mean, you probably all know that retail is a very challenging place to invest right now. And if you read the papers, retail has a bad name. I'll leave it at that. Most of that's related to malls. What we do is all because we're grocery anchored. We've really been in the sweet spot of retail. Our grocers have stayed open, have been doing exceedingly well. What we have seen and what we're going to continue to do is you really need to focus on having the dominant grocer in the market in the best location. So we're more than ever not willing to take risks on location, or even on our anchor grocer. So not every retailer is going to survive. Not every shopping center will survive. We think you're going to have in any market, the number one and number two centers will be fine. The others could easily be very challenged over time. So I think the biggest change that we've made as investors is just being exceedingly conservative in our underwriting and exceedingly careful in the markets that we look to invest, and the grocers we look to invest in. We're not investing in the grocer, but as a tenant in our grocers. So, and I would say that, speaking to the entire real estate industry, I mean, we're really not assuming rent growth over the next couple of years. And I think you could probably say that's true of anybody who owns an office building or multifamily apartment building. I mean, there's just not going to be a lot of rent, so you're going to have to find ways of generating value some other way. Anybody else there?
Yeah, I have a question, Stephen. So down here under creating alpha, one of the bullet points is increasing customer traffic. Is that, how hands-on is that? Is it, you have a Target next to a Dollar Tree, and then foot traffic from either store is gonna kind of go into, both stores? Or is it more hands-on, like marketing and other ways to increase customer traffic?
It's a bit of both, and certainly through COVID, it's been more of the latter, where we've been much more proactive in working at each of our centers to increase that traffic by putting signs out on the street saying, "Hey, we're open." I mean, it's as simple as very basic stuff. But generally, what we do is it's a combination of factors. It's you want the center to look good. So making sure all the lights are on in the parking lot at night. I mean, you'd be amazed at how many shopping centers are half dark at night. Do you want to go there? No, you drive right by. But if that parking lot's well lit, you're going to go there. You want the signs to look good. You want it looked well paved. It's just the physical appearance.
Mm-hmm.
And then the other way to increase customer traffic is through leasing. You want to bring in tenants who are going to bring in other customers. In the past, that's been bringing in a top tier gym. They're closed right now.
Yep.
They're going to come back. I think that's still a play. But you want to find, if you can, you get rid of the retailers who really just don't drive traffic and are either not, they're selling something people don't want, or they have, they're not selling it well. So we will try to replace them with, whether a national tenant who can advertise their own, or if they're a local guy, somebody who's got a lot of buzz, whether a restaurant owner or a retailer. Acknowledging that right now those are challenging, but they'll come back, and they'll do well over time. So, and people are going to want to come to the center to see them.
Thank you.
Yep. One thing, and speak if there's questions, speak up. But I will say I had mentioned that one way to get into this business is through internships. we are, as I said, we're down here in Stanford, and it may well be a virtual opportunity, but we are certainly, if there's anybody that is in the crowd here that's interested, please reach out to me. We'd be happy to talk. It is again, as I said, it can be a challenging industry to get into, but once you're in it, it's great. So certainly take advantage of these opportunities. I think it's whether with us or there's other real estate firms here in Stanford, either private equity firms, and then also, as I said, a number of brokers around who I think all do offer either mentorship or internship opportunities, but would be good groups to talk to as well, which we can help.
Hi, Steve. I'll chime in here.
Yep.
I'm Catherine Panzak, and I'm a professor in finance in the Stanford campus. But I just wanted to make sure that you realize that at the University of Connecticut in Storrs, we do have a real estate major. And in fact, it's, you said there's only a few good programs in the country. We're regularly ranked in the top 10, in fact, often ranked in the top 5 in the country, which I'm so proud of. So I wanted to just plug that in there. In a little while, I'm going to talk to the students in Stanford about the possibility of at least minoring, because we don't have the major right now in Stanford. But there is a possibility that if they stretch themselves a little bit, they'll be able to minor. So I did just wanted to make sure that everyone's aware that we have what's called the Center for Real Estate out of the Storrs Campus School of Business, and it is a top-ranked program. So I hope you're taking a look at some of our students sometimes too.
We are, and I was aware of that, and I hope I didn't come off as dismissing that. But
No, not at all. But I didn't know, I didn't know exactly, actually, where did you go? You're one of our alum, right? Did you go to UConn?
No, I'm not an alum. I'm a fan of UConn, but I'm not an alum. So
okay, I was just invited recently to this meeting to talk to them about the minor, so I wasn't 100% sure your background. But I think it's exceptionally exciting that we really do have so many different real estate opportunities for the students in Fairfield County. And I wish I could move our real estate major and our real estate center down to Fairfield County, where all the action is. But right now they're based out of Storrs.
Yeah. No, they're both. And I think, and I would tell you guys, if anybody I would take advantage of those resources, whether in Stanford or in Storrs, because they really do make a difference for people who want to make a career in this industry. So, and I will reemphasize, there are a handful of programs that are really good, and there's not a lot of opportunities to get a degree in real estate finance. So,
Right.
I think if you're interested, go for it. So happy to help where we can.
Oh, that's great, Steve. And I just wanted to thank you so much for talking with our students too. This is great that they have the opportunity to hear from someone in industry that gets them a little excited about a particular area like real estate.
Good. Well, it was my pleasure. My contact info is at the last page on these slides. So feel free to reach out to me if you have questions. Whether about anything I said or anything I didn't say, if you're interested in internships, if you want to know just about the industry or anything else, I'm happy to try to provide it. So.
Great. Maybe when this COVID time passes, we can actually get you live into one of our classes.
Be happy to. So hopefully that's sooner than later.
Right.
This is Marlis. I want to thank you so much for joining. We start out with Fran giving me your name, and then we got this all set up, and Fran's on the call too, and we can't thank you enough for bringing this interest to our students. Fran, you want to say anything?
Well, not only would it be nice for you to go to campus, but if you would invite them to come to your building and take a look around, that might be something else that would be really interesting.
We'd love to. We do have one of the better views in Stanford, so we'd love to have you guys. And we could do a lunch or something, and it'd be great. So when that happens, let's make that work.
Fantastic. Thank you so much, Stephen. We really appreciate your time and your effort and all that you've done for us and will do in the future, I'm sure.
Yep, my pleasure. So good luck to everybody. So.
Yep. Thank you, Stephen.
Okay.
And for everyone on the call, we will be sharing the slides later today.
Thank you for inviting me, George. I have to leave now. Appreciate it.
Okay, thank you, Fran.
I'm going to drop off here. So thank you.
Catherine, do you want to add to this now before we do the rest of the meeting?
Well, George, just tell me what you want us to do at this point. I'm happy to talk a little bit about our real estate program at the University of Connecticut. And I do have a slide to share about the minor.
Okay, yeah. So, Catherine, Professor Panzak, I just made you a presenter, so you're able to share your slides. Perfect.
Okay, excellent, excellent. Let's see if I can get this to, Good. Well, I just wanted to make sure that everybody realizes that we do have a nationally ranked real estate program at UConn. I am so proud of it. And you hear from people like Steve that when they are hiring in the real estate area, it does send a signal that someone's really interested in real estate if, in fact, they've taken some real estate courses and are maybe participating in our real estate program, as well as maybe minoring or majoring in the program. I know it's hard for the Stanford students to actually think about a major because most of the time that is going to require at least 1 year, 2 semesters up in stores. If you are thinking of going to stores, maybe you want to look at the major. If you're thinking you want to be in real estate, but you're going to stay on the Stanford campus, you can perhaps think about the minor. Now, we're in a little bit of a transition period right at this exact moment because we're putting more courses online. In the past, it was difficult, but let me just go through this very quickly and talk to you about what you could potentially take on the Stanford campus and what you might need to take either online or on the stores campus. So it's only a 4-course, each is a 3-credit, a 4-course series in order to get the minor, which isn't too hard. Okay, you need to take Finance 3230, which is Real Estate Principles, or Finance 3101. Okay, so as I see who was on this, I see a few of you have been in my 3230 and in my 3101. You've met the first hurdle. Okay, so you need to take one of those courses. And then in addition to that, you need to take 3 more courses. Of course, one of those additional 3 courses could be the other one. If you took 3101, it could be 3230. If you took 3230, it could be 3101. So there's 2 courses right off the bat that you can get on the Stanford campus. All right. And then you see the other list. So you have 2 courses. You need 2 more from that additional menu item list there. You need the real estate investments, real estate finance, markets valuation, and a couple of the others there. Those are the ones that still present a little bit of a challenge for our Stanford students. But as I said, we're a little bit in a transition in the real estate program because right now those courses are being offered online. So right now that would have been something that you could have jumped on, and maybe down the road we'll be able to offer that more. One other thing I'll say is the more that the Stanford administration hears from students that there is an interest in maybe bringing the minor down, perhaps we could bring this minor down because all we need to do is bring 2 more courses down. And it was because the Stanford students asked and asked and asked for the accounting minor that we got the accounting minor. So if there is enough student interest in a real estate minor, it only involves bringing 2 more courses or having 2 more courses online. So you guys can advocate for yourself if this is something that you're interested in. I'd be happy to take questions on anything having to do with our real estate program at UConn.
Yeah, I have a question, Professor.
Sure, George.
So it looks like all of this, best case scenario, these courses that you do need for the additional courses are going to be offered online, after this pandemic.
They may or may not be. We're talking about that right now. 2 are for sure in Stanford. We need to get 2 more, whether they be online or come down to Stanford.
Okay. So instead of that, is there anything currently like a certificate through the business school or anything else related to real estate that students can get right now?
Yeah, that's a good question. There was a discussion on a certificate. I don't believe that that's actually gone through it, but I'd have to double check that, George. I'm not 100% sure I can answer that question.
Okay, thank you.
The other thing I'll just tell students, if you know or don't know, if you take the 3230, which is our real estate principles, which is offered, the Stanford campus and on the other regional campuses, that actually can prepare you to get your real estate broker's license in the state of Connecticut. And when you're taking that course, I explain how it does. You still need to take an exam at the state level, but what they end up doing is if you do a good job in that 3230 course, the state of Connecticut has in the past waived the requirement to take the 60-hour additional course that is a pre-licensing course in order to take the exam. So I've had many students take advantage of that and then gone off into either residential or commercial real estate brokerage. Good. Any other questions? Well, feel free. And I know some of you have been in my 3230, some of you are in my 3101. Feel free to send me an email if you want to discuss this a bit further. And once we get going, in more of a regular semester on the campus, I'd be happy to meet with this group live. And if there is enough interest, I'd be happy to help you advocate for getting 2 more real estate courses down so you can minor down here. Okay?
Yep. Thank you, Professor Panzak.
Good. You're welcome. I'll stop sharing right now then.
Okay.
Thank you.
And if there's no other questions for me, I'll probably sign off at this point. Any other questions? Good luck. I'm so glad, George, and everyone else I'm seeing here, I'm so glad to hear that you guys are still meeting and you're making this work despite what we're going through. And I hope to see you all on campus relatively soon.
Likewise. Thank you.
Bye-bye.
Thank you.
Thank you.
Okay. And Marlis, I believe you had an announcement, the CFA?
Yeah, I have, some of you probably have heard of the CFA exam. Now, you all are invited to all the CFA Stanford Society meetings. And it's free for you, it's free for students, some great, great presentations. I think there's one this week again, right, George? Is that on the 24th, I think, or the 23rd?
Yeah, this week.
Yeah, it's a webinar, and those things you can just go on. You don't have to, you don't have to put your face on there or anything, but there's some really good information. But the CFA Research Challenge is something that will be the 3rd year that Stanford has had a team, and we definitely will have a team. Now, I see it's open for undergrads and grads. You really do want to have some kind of finance background, because what they do is they pick a company in Connecticut. Last year was FactSet in Norwalk, and your team does a whole analysis of the company, and they give you, the format of what to do, and then at the end you make the decision whether you would invest in that company or you would not invest in that company. Now, the kickoff is actually October 28th. They will reveal the company. So before that, probably next week, I will have the applications ready and put them on the website. I'll send it to everybody in the finance club. But you will have to do your application, and on there you tell us what finance classes you took. You will also have a 300-word or less paragraph to tell us why you would be interested in this. Now, again, it starts October 28th, and usually you do your presentation, or you put your report in right after the first of the year. So one thing I want to tell you, if you go home for Christmas or the holidays, this might be difficult because there is some work over the holidays that you do and you work on this. Professor Tran, which maybe some of you have had, he is the advisor at UConn, and then you will have an advisor that actually is a CFA member. Now, they don't help you all that much. Professor Tran gives you 10 hours, and the other advisor, I think, gives you 5 hours of their time. But it's such a great way that you can, do a project that's really big and great experience for you. I do know a student that did it last year, so if any of you are interested, I could have her talk to you about it and just kind of tell you what the commitment is and everything. But I will be putting out those applications soon, and I encourage everybody to try to do this competition. It's very interesting. And then the other thing is, some of you have seen through Judy, IBM now is looking for co-op people to apply for their co-op. And that is such a great co-op to have. Even if you don't end up working for IBM, almost everybody who we've sent to an IBM co-op has done exceedingly well when they graduate from UConn. Goldman, just some of the big firms that some of these people have gone to. So it is on Handshake, and if you don't know where it's at, Judy Stewart, who talked last week, could help you with that, but we're definitely looking at people, and you need to be a junior in undergrad in order to be eligible. So again, if you have any questions, I can answer questions on that too. So, all right, thank you.
Thank you, Marlis. And I do know the former president of the Financial Management Club, Priya, is actually in the co-op currently. I know at one point we may have her come in to speak about her experiences with that. So if anyone has any questions regarding the Market Watch for Parth about signing up or any club questions, we're here to answer.
Parth, I have a question.
Yeah.
How are you going to monitor the Market Watch? And maybe you told them, but I didn't necessarily hear. How are you going to let people know where they stand in the Market Watch each week?
Let me just bring up the email. So what I said specifically, let me just bring it up. So I said there will be different sectors, so every 2 weeks we will be changing, but it's kind of being like having faith that, I trust them that they'll do the right sector and they're not going to do like, I don't know, Tesla or Apple on a healthcare day. But as me, I can monitor that activity as well. I can open up their portfolios and look into it, and their dates are attached to it whenever they trade as well.
And how much money do they get initially?
100,000.
Okay. Play money, not real money.
Yeah.
We wish real.
Yeah.
Thank you, Parth.
Yep.
I have a question. Can you guys hear me?
Yeah.
I'm just wondering, when does it start?
It should be starting right now.
Can I get a link? Because when I get here, there was the presentation.
Yeah, sure.
I
It's in
can
the
send
chat
out the
right
link.
now.
I mean, I guess it would technically, it's open now for you to join and enroll, but I think trading would not start until market open tomorrow.
That makes sense. That's why. Okay.
That makes sense.
Yeah, I don't think Market Watch allows pre-market or after hours trading. So
Is this the first week?
yeah,
Yes.
it's tomorrow's the first trading day.
Okay, sounds good. Thank you.
No problem.
I mean, I know Parth, you have specific settings for the trading, like stop limits, stop losses.
Yeah.
So I know if anyone has any questions on like the technicalities of operating a trade, like commission fees, stuff like that, it's all virtual money, but that's all relevant to your performance.
Yeah.
I just had a question. What was the password for the Market Watch?
The password is Stanford 2020. I'll type it in.
Thank you.
Mm-hmm. Let me know if you're in, okay?
All right, so any other questions today? No, okay. Thank you everyone for coming. I hope this was a very informative meeting for those of you that saw the presentation, as well as what Professor Panzak had to say.
Mm-hmm.
All right, bye everyone.
All right. Thank you, everybody.
Thank you.
Thanks.
Thanks.
George, I had a question.
Yeah, what's going on?
What's it called?